Welcome to Smart Stock Watch. Today is May 27th, 2025, and we're diving into Okta's first quarter fiscal year 2026 financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's great to be here to discuss Okta's impressive start to the fiscal year.
The Okta has just released their Q1 2026 earnings report. Can you give us a brief overview of the company and the highlights from this report?
Absolutely. Okta is a leading identity security company, and they've reported a strong quarter with record operating profitability and robust free cash flow. Their total revenue reached $688 million, marking a 12% year-over-year increase.
Revenue and profitability overview. Let's start with the top line. Okta reported a total revenue of $688 million for Q1 2026, which is a 12% increase year over year. John, what are the key drivers behind this growth?
The growth in revenue is primarily driven by their subscription services, which also saw a 12% increase to $673 million. This indicates strong demand for Okta's identity security solutions across various sectors.
And what about their profitability?
Okta achieved record GAAP operating income of $39 million, a significant turnaround from a loss in the previous year. On a non-GAAP basis, their operating income was $184 million, reflecting a robust operating margin of 27%.
Cash flow and financial health. Moving on to cash flow. Okta reported an operating cash flow of $241 million and a free cash flow of $238 million. How does this position them financially?
These figures highlight Okta's strong cash generation capabilities. With $2.725 billion in cash and equivalents, they are well positioned to invest in growth opportunities and weather any economic uncertainties.
That's impressive. How does this compare to their previous performance?
Compared to the same quarter last year, both operating and free cash flow have increased, showcasing their improved operational efficiency and financial health.
EPS performance and analyst expectations. Now let's talk about earnings per share. Okta reported an adjusted EPS of $0.86, which is a significant beat compared to the forecasted 24 cents by 12 analysts. What does this tell us?
This substantial beat indicates that Okta is not only growing but doing so efficiently. Their ability to exceed expectations by such a margin reflects strong operational execution and cost management.
What might have contributed to this outperformance?
Factors include their record operating profitability and effective cost controls, which have allowed them to convert revenue growth into higher earnings per share.
Future outlook and strategic initiatives. Looking ahead, what guidance has Okta provided for the next quarter and the full fiscal year?
For Q2, Okta expects revenue between $710 million and $712 million, and for the full year, they anticipate revenue of $2.85 billion to $2.860 billion. They are focusing on profitable growth and innovation in their identity security platform.
How does Okta plan to achieve these targets?
Okta is leveraging its position as a leader in identity security to drive growth. They are focusing on expanding their customer base and enhancing their platform to meet evolving security needs.
Key takeaways. In summary, Okta has delivered a strong start to fiscal year 2026 with impressive revenue growth, profitability, and cash flow. Their ability to significantly exceed EPS expectations is a testament to their strategic execution.
Indeed, Okta's performance this quarter sets a positive tone for the rest of the year. Their focus on innovation and profitable growth positions them well in the identity security market.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Okta's performance in the comments below.